It's over. Trump just broke the stock market. What you must understand in 2025. In a bold and controversial move, President Donald Trump's economic policies are shaking the U.S. stock market. Major investors are analyzing why we may be witnessing a significant turning point, not only in financial markets but also in global investor confidence. 1. What just happened? President Trump has introduced a series of policies directly impacting the market, including increasing taxes on major tech companies, imposing new import tariffs, threatening to eliminate incentives for foreign businesses, and making shocking public statements that have shaken investor confidence. The result? The stock market plunged. Indices like the S&P 500 and NASDAQ turned deeply red, with hundreds of billions of dollars in market value wiped out in just a few trading sessions. 2. Why did the market react so negatively? Markets don't fear change, they fear uncertainty. And President Trump, with his unpredictable statements and policies, is generating exactly that. Investors, large funds, and businesses cannot develop strategic plans if every week brings a new policy or a tweet that flips expectations upside down. 3. The hidden message behind this collapse. This event sends a powerful message to the 2025 generation of investors. Nothing is guaranteed, and markets can always react strongly to political disruptions. This isn't the first time Trump has shaken the markets, but this time, the impact comes with real economic risks, high inflation, unstable interest rates, a cooling real estate market, and consumers beginning to tighten their spending. 4. Core lessons for investors in 2025. A. Do not invest based on political emotion. Whether you support or oppose President Trump, the market doesn't care. It reacts to data and collective sentiment. B. Long-term thinking always wins. Short-term crashes are normal, but with a diversified portfolio, steady cash flow, and disciplined strategy, you'll survive and likely thrive after the storm. C. Use crises to accumulate assets. When markets fall, high-quality stocks often get undervalued. This is the time to buy smart, not run. D. Diversification is a must, not a choice. Don't just hold stocks. Build a balanced mix of real estate, gold, index funds, and even digital assets if you understand them well. 5. Did President Trump really break the market? Trump didn't destroy the market. He exposed its existing weaknesses, such as unsustainable fiscal policies, over-reliance on consumer debt, tech companies being overvalued based on hype, not actual profit. What he did was ignite a time bomb the market had been building up for years. 6. A message to you, the investor of the future. If you're investing in 2025, remember, no one can predict the bottom of the market. No one can control politics, but you can control your reaction and discipline. Every market shake-up is an opportunity to reassess your financial mindset, refine your investment strategy, and build a stronger foundation for the future. In conclusion, 2025 is not the end. It could be the beginning of a generation of smarter, tougher, and more resilient investors. Take the lesson, not the loss. The real question is, will you panic, or will you prepare? Thank you, and see you again.